Good evening. This is Ryan with TrendLizard.com. I'm taking a look at FNGU, which is an interesting ETF. It is the FANG stocks, basically Facebook, Apple, Amazon, Netflix, and Google, leveraged times 3. And that's what they get when they put that together. There's other stocks that are similar to those 5 that go into this, but bottom line, it's basically those stocks. And this is a ETF that tracks those. So a couple days ago, I looked at FNGD, which is basically the reverse version of this guy. This one is the bullish version. The other one's the bearish version. So this is very similar. It's basically just the whole deal inverse. So now, as you might have heard of, there was an earnings report today on Facebook. Facebook was absolutely destroyed. As a result, this guy here declined nearly 9%. Which all considered isn't that bad if Facebook lost 19% of its value and this guy's leveraged times 3, a 9% decline could have been a lot worse. But it basically leads us down a path that was similar to what I had already concluded when we looked at the inverse of this ETF, and that was that this pullback off the June's low is not yet over. So that's basically what we're looking at. We'll step back out here. Basically, it's a very new ETF. It's in an advance. It looks like a 5-wave advance. It's not complete off of April's low. I believe it to be in the 4th wave pullback of this 5-wave advance right now. Basically, the 4th wave is not over yet as we looked at here. It looks like it's going to move deeper into this yellow area before the next up leg takes hold. So I would be careful right here. I wouldn't be looking to buy at this moment necessarily, just because it's not heading up and this pullback needs to be respected, especially with what happened with Facebook today. So basically what it boils down to is if FNGU moves below 57.50 at any point in time, that means the whole deal's off. That means this guy is heading lower, but I don't think that's going to happen. I think what's going to happen is we're going to see additional weakness somewhere into this yellow area, about 57.50 up to about 69. And once you get that next down leg, ideally to a new low, which should occur, and then you start seeing some strength and start seeing some little 5-wave advances that pop up to the upside, then it becomes a buying opportunity. So that's certainly something that I can look at for you when it does start showing some life again. Right now, I think you got to expect lower levels, and I'm going to dive into one lower or one smaller degree here just to show you this is what's happened off of June's low. I'm just not seeing anything to suggest that it's over, especially today's big 8.5% decline. But even before then, there's not a lot saying that this guy had ended the pullback. It looks to me like it needs to head down. So what you're looking for, again, to indicate that a pullback's over is that there's some trendy upside movement. Ideally, you see a 3-wave pullback that plays out first, and then once that's done, you start seeing some trendy upside movement, even on a small time frame. Then you can start working with it, and then you can start looking at the possibility of a low. But until then, I think you have to expect lower levels in the near term for this guy, so I'd be careful buying it. Again, once you get another down leg and it starts showing some life, ping me. We'll look at it. We can find you a good entry level and go from there. I hope that's helpful. Have a great evening. We'll talk to you again very soon.